So just looking at this gold, we've been harping on about the downside for the best part of a few weeks. Just to recap, we're on 3 weeks of rise. Um, had been 3 weeks of rise up until this point here, right? So we've been talking about the whole of January, sorry, 3 months, the whole of January, all of this December, November. So up and up. Came up to the January high, the 2003 high so far. This green area, and we're penetrating into that lower third of the 1, 2, 3 levels of rise for the month for the year's range so far. We had breakout traders at the start of the year that were trapped, so were moving into their positions, and long may that continue lower. So we'll be targeting the bottom of a 1,000 pip box. Bear with me. So 1, 2, 3 levels of rise, all in here as well. So 3 months of rise, 3 levels of rise for the start of the year, 33, 33, and then we've got this 1,000 pip box where these longs were trapped, and we're targeting the January range, right? Bottom of the January range, and that 1,000 pip box be here between 1925, 1825. That's the thesis. Now, we talked about in many articles that I've written at FX Street this correction to come lower. We've done that, we've completed that in London's volatility. So the matter at hand is what next? So we've had this pump up in the US session, leaving this W formation, coming up into London's shorts. We're resting above last week's lows, the Friday non-farm payroll sell-off. We've corrected up into that length of last week, the shorts of last week, in a sizable correction that's blown off, which we talked about, took advantage of over here, etc. At the start of the week, and we left this W formation. We're finding support at the neckline. And today we have the Michigan Sentiment Survey, which could be pretty positive, good for the dollar, given that unemployment is at all-time low and inflation, there's less inflation being reported. So those themes could present themselves in a strong Michigan Sentiment Survey, which could be positive for the US dollar. That comes out in an hour's time. So that's red news, so nothing to do until then. Now what we're seeing again is this pump up into the London shorts from up high. What do we know about breakouts? This breakout here, most of them fail. So we'll be looking for this pump up to be counter-traded later on in the session, potentially with the Michigan sentiment as the catalyst. Now, there's nothing to do, we're on the front side of the day's range, so there's the trend line, so we'll just make that hasn't been broken. So we're going to leave that in as one of our trigger points to start looking for our setup. So it'd be nice if we could just come a bit higher and then peter out at yesterday's highs. Those have already been cleared, by the way. So we've had that stop hunt of the blow off from yesterday. So the question might be, well, if we're moving up and we've broken, let me draw it out, and we've broken this trend line, if you like, draw that in, something like that, or even you could draw it up there and pull it in. Something like that, right? Draw it broadly. Then why is the thesis not higher? Using this as support. So we've broken structure over here with this burst up, finding support of the old resistance, and we're building on that. So why is the bias not to the upside? Well, I mean, I have no idea. I mean, it could easily continue higher, but what we've got to recall here is that if we pull this right back, let me actually get rid of all this stuff. Right, so blank chart. These arrows, these represent the daily closes. So the green represents days that were closing green, such as yesterday. And such as the prior day. Yesterday was a red day, right? So this is going to be my point. So yesterday we closed red, bearish. These prior days were all bullish days. Okay, so just to explain that. If we pull this right back, we're actually on the backside of a more dominant trend. Okay, so we turn that red, indicate we're on the backside of it, bearish. It's been broken. That trend is broken, so we're heading lower. That's the thesis. That's why we're not looking for a continuation up. We're looking for this break of structure. Now we've had a number of breaks of structure. So here's one. Right, so in yesterday's business, today's continuation of, we broke that structure over here. So it's quite natural once a break of structure occurs for the market to move back in. So that used to be support, regarded as support. So we draw that as support. Okay. And then it was building up, higher highs, higher lows. But that is our structure point. Below there, we're bearish. So we broke below there. So we'll make that red now. Well, we leave it green because the market's above it now, but it's a bearish scenario. So we're coming up to come back down. We've got our resistance over here. Presumed resistance is old support. It's already bounced up there once. It's coming up again. Now, where was our other structural point? Well, it was up here. So we broke that structure as well. It's low. Draw that in here if you like, however you want to put it. So that's bearish. So we broke that. We've broken this one over here. Right, so that is why the thesis is low. Breaks of structure. impulse, correction, impulse. We're looking for the lower. If we come over to the 4-hour chart, we can draw our Fibonacci here. You can see that we've come up to 50% of this retracement. And draw the same on this 4-hour impulse. And we've come up to test the area of support near a 50%. Well, yeah, touched 50% of that move, and we're finding potential resistance around 38 retracement, and we'll be looking for this to roll over. Red. Okay, so that's the thesis. And on a shorter term, I'm drawing this trend line. So this is essentially all of what you're seeing here is what I've drawn on the other chart. I'm just trying to make this clear for everyone why the bias is still to the downside. And we'll be targeting for the day for the scalp. Is in here. '50s. Now what I like to do is I like to draw a Fibonacci. I'm not saying that this is the high of the day yet, but it seems to be the London highs, the Fibonacci to the correction of, and then actually extend my target to meet at least the minus 272 correction. So just a touch below 50, a few dollars below. And then a longer term target would be drawing the same scale. So we've got the minus 272 of that almost achieved. So a break of there would be cementing the thesis for a touch lower on this. And then even moving further out, we have 41s, the minus 61.8 of that correction, and so forth. Now we've got a new low for the day on this move. And a new high. So you're meeting resistance here. You've got these wicks. So this is, call this the high of the day at 67. And the low of the day here on this interchange between the 5-minute candles and these wicks. So you've essentially got trap volume in here, up here. Call all of this resistance so far for the day. New resistance, lower resistance. So we're just building our thesis for the move to the break of the trend line. Trend lines, I should say. You can also draw, this is like a symmetrical, semi-symmetrical triangle. just going to clear up this chart with taking out the fibos, got our downside target established. And in terms of the first red day, so we've got this impulse of higher closes. Yesterday was a bearish close, so we're looking for the move up into that length for another bearish close. We need to close below 61 or whatever the close was. Yeah, 61.6 for that thesis to play out. So considering we're up high, we've got plenty to come down and target. So we can draw that close in there as a support. That's the line in the sand. A break of that signifies lower still. And what we're waiting now, wrap up this video, we're waiting for a break of structure and move out of, first of all, this trend line here. We can start building our bearish thesis on the break of that. And the new lows of the day, so out of this box, and we'll start looking for our setup on the 5 and 1 minute candles. Okay, thanks for tuning in. This will be put onto the YouTube channel. And for the TradingView community, and we'll do an update later. We're waiting for the Michigan sentiment report. Nothing to do until then. Not even if we have a break of structure, not even if I see the setup. I'm waiting for that report today to see how the market reacts to it. Again, I'm looking for a strong report to be favorable for the US dollar and for the catalyst for the day's trading. We've actually got 7 minutes until the cash open on Wall Street, so we're up high, looking to come down on the stocks. As well.